What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NIO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So another great week in markets. The rally extended and broadened, of course, on the back of the released inflation positive data. Isn't it interesting how quickly the tides can turn? Now, we'll get to NIO in just a moment, but I think it's important to pause and recognize where we are at the moment. It took us 6 months to bottom on the SP 500 and other indices, right? We bottomed here in June with a decline of 23% on the S&P, and now just over half of the losses have been erased in just 2 months. And let's not forget that this happened all while the vast majority of the financial media was telling you and I that we should be bearish and wait for all the uncertainty to clear. Had I done that, I would have missed out on, just this past month, Bitcoin 21% gains, ChargePoint 57% gains, Hive Blockchain 127% gain, Tesla 28% gains, Polygon 60% gains. That's just to name a few, so you get the picture. If you go back to June 16th low, the gains are even greater. This now brings me to NIO. If you look at the last month, we traded pretty flat for just a small 1.15% gain. However, that's a bit deceiving because if you take a look at the past 6 months, you'll realize that we bottomed here on May 12th with a low of $11.67. We have nearly doubled since then, and you can see that the overall trend is up. I believe that there's a pretty good probability that NIO continues to trend higher and forms a golden cross in the not so distant future. And that's what I want to talk about today. I'll cover what helped us rebound to the current level, how analysts are rating the stock ahead of the earning call, and why I believe again that the positive trend will continue. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I do recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already and hit that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Okay, so if you watched my last video on NIO, you can catch it here if you missed it. I told you then that buying into the fear had already returned about 40%. The key to being able to make these bold decisions when markets are crashing is, of course, understanding the business fundamentals. With Q2 behind us, hedge funds and publicly traded financial institutions now have to disclose what they bought or sold. As it turns out, many saw value in adding to their NIO positions. First up is JP Chase. They added 1,400,319 shares to be exact during Q2, bringing their total share counts to 5,628,106. The 30% increase this quarter is of course significant. However, context is everything, right? JP Morgan at their peak owned 10 million shares of NIO, and that was in January of 2021. They closed 2021 with nearly 80% of their positions sold. As 2022 has gone on, they're now building back up. Next up, we have Baillie Gifford. They've been one of the earliest backers of NIO. After the Chinese government and Tencent, Baillie Gifford has the largest position in NIO. They have now added in Q2 alone a larger position than JP Morgan for a total share count of nearly 97 million. Baillie Gifford is well known for their long-term investing mindset. Their motto is actual investors think in decades, not quarters. Looking at the table here, you can see that their position is overall growing. I couldn't help but also notice that the article calls out BlackRock, the largest asset allocator on the planet, and Vanguard as investors in NIO. I'll give you a couple more. HSBC, which is the largest bank in Europe with $2.9 trillion, trillion with a T, of asset under management, has increased their position in NIO by 145% in Q2. Those 9.4 million shares are valued at around 68.19 million, and you can see on the graph below how they've positioned themselves from 2021 to date. I mean, looking at these disclosures to the SEC is fascinating, and I could go on forever, but I'll give you just one more. Renaissance Technology, one of the world's most prominent hedge funds, added over 12 million shares to NIO in Q2, bringing their total share count to almost 18 million, right? So that represents a 228.96% increase quarter over quarter. That's a massive increase. The bottom line is this: if you step back, institutions locked in the massive gains from 2021 as soon as we get into 2022. Between Fed policies, uncertainty around the SEC delisting process, and geopolitical tension between China and the US as a result, of course, of the Russia-Ukraine war, because again, China and Russia are allies, there were a ton of reasons why these big institutions had to minimize their exposure. All through this, the fundamentals at NIO did not change in a negative way. It's the opposite, in fact. That's why I've been saying for the past few months to use this weakness as an opportunity. We are where we are now because all of those institutions have very smart people who clearly see the road ahead is more clear. And that belief that institutions have that the road ahead is more clear is what brought in all the buy pressure during Q2, bringing us ultimately to where we are today. That's the cool thing about data like institutional interest and paying attention to the fundamentals versus basing the decision to buy or sell on whatever narrative happens to be pushed that week in the financial media. Another data point that was and continues to be key is the overall analyst view on NIO. The current consensus average price target is $33.04. This implies an upside of 56.51%, which of course, puts a smile on my face. The high-end forecast now has us at $48, and the low end is coming in at $25.80. Also worth noting that you don't get a unanimous recommendation of a strong buy if the company fundamentals and valuation aren't rock solid. Price target on the high end have come down, but that is to be expected with still so much uncertainty with the supply chain specifically. So what are my key takeaways? Well, I've personally rebalanced my portfolio a few times between late 2021 and now. The focus has and continues to be to lower my average cost and at a minimum have a total of 1,000 shares before we return to all-time high. My rebalance was similarly driven by risk management and taking advantage of the massive discount on the NIO stock while it lasts. NIO has some solid catalysts that should help us continue to move higher. To name a couple, deliveries on the ET5 will start in September, but before that, the interior unveiling of the ET5 is set to take place at the Chengdu Motor Show starting in the last week of August. Also this month, the ES7 SUV deliveries should start. The earnings call was pushed back to August 25th, at which point we should hear the full impact of the COVID lockdowns on their margins. That said, we already know they exceeded the delivery guidance they gave in Q1. As a reminder, that was 23,000 to 25,000 deliveries. The total number delivered in Q2 was 25,059 vehicles. And that, of course, was in big part due to the strong push NIO had in June. When you consider that NIO currently has 733 institutional owners and shareholders, that includes some of the biggest names in the financial world. Think BlackRock, JP Morgan, Bridgewater, Bailey Gifford, just to name a few. They all spent the past 3 months loading up in anticipation of the various headwinds, including inflation, to continue to moderate as we move forward in the year. Bear markets don't last forever, right? And in actuality, they tend to be shorter than bull markets. Yes, you'll get the occasional headline like this one here with Pelosi that will add some noise, but investor sentiment is shifting, and it's shifting quickly to the positive side. Here's the last thing I will say. I've been telling you for months now that the bottom is in for NIO. Could I be wrong? Absolutely. Something crazy could happen, taking NIO and the entire stock market down to new lows. That said, short of something like that happening, the gap between the 200-day moving average, that's the blue line, and the 50-day moving average, that's the purple line, will continue to narrow with all the buy pressure that's coming in. The red arrow is the May 12th low for NIO specifically, just for reference. When it comes to technical analysis, a golden cross occurs when the short-term trend line crosses above the long-term trend line. That provides a strong bullish signal and confirms the positive trend. At the rate we are going right now, it won't be too much longer before that happens. Institutional interest in NIO isn't shrinking, it's actually growing. And I'd recommend making a plan now and following through if you haven't already. You don't want to be that person experiencing massive FOMO and kicking yourself later because you waited too long on the sideline. But on that note, that's it for me today. Don't forget to drop the video a like if it helped you gain a new perspective and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.